Hey everyone, we are back for another episode of the Data Dive. My name is Giacomo Ladas, and as always, we are joined by David Aizikov, our manager of data services. David, spring is here, new rent report out. Thanks for joining me again for a chat.
Always a pleasure.
So the recent rent report was interesting because what it did do was mark a half decade since March of 2020. I don't know if you're a student of history, but that was when COVID-19 really came into play. Um, so
It's a darn half decade.
Yeah, definitely. And, what we've seen over the last 5 years is kind of centered around a lot of the questions that we've received. But before we get into that, I just want to kind of set the tone of what we saw in the latest rent report, where asking rents saw their first monthly increase in about 6 months. I kind of want to get your take on this. Why do you think that happened? What can people expect in the future? And just kind of form the whole month before we get into our discussion.
Absolutely. So March was an interesting month. Kind of taking a step back from the actual rent growth that we were seeing. Month is typically kind of the early onset of rental rebounding on an annual base. Typically we see demand slowly pick up. March is really that where that first pickup starts, and then it begins to accelerate dramatically in April. And with that gradual acceleration, we typically see that the market will slowly pick up. And I think that's really what we were seeing. Obviously, that wasn't happening across the board. It wasn't happening clear across the country. Um, Nationally, rents um, are up marginally. However, when we compare them to the previous year, we see that they're still down. Okay. However, when we look at specific markets, okay, and when I say specific markets, I am referring to Manitoba. In Manitoba, we have Winnipeg, um, we have Edmonton, we have Halifax. There are key markets, and these are small little tertiary quaternary communities. These are larger urban centers in these provinces, and these communities are actually seeing year-over-year rent growth. In some cases, with Edmonton, 0.4%, Winnipeg, 0.6%, but then we start to see some more substantial growth with Halifax, 4.9%. And that is really a result of markets that are seeing more and more competition. When we actually look at rental demand, we saw substantial increases uh, in March. Again, this didn't happen across the country, but on an
Mhm.
average, we were seeing really strong rebounding, stronger than last year, and on par with the long term average. Whether this is a kind of a return to normalcy might still be a little bit too early to tell. But just like at the tail end of COVID, when we had this massive surge of rental demand, that we might be seeing something very similar, maybe not to the same extent, but something very similar in the sense that renters who wanted to move for the longest time and kept pushing and delaying, and uh, they've ultimately met their mark, and now it's time for them to make a decision. And I think as a result of that, we're seeing more people actually return to market.
Do you think any of that has to do with the improved affordability that we're seeing now too? It maybe swayed some people who are, maybe moving to their first rental for the first time, or maybe they're currently an in-place renter who has now seen, market rents kind of come down to a point where they're interested in actually finding a new place or seeing that it actually might be time to move to a new location, right? So I'm like I was suspecting that we've seen such prolonged decreases in rent in a lot of these major cities that I think that's probably gotten people more interested, which has increased demand.
I mean, you're absolutely right. We were even seeing this as late as last year, where young families in urban markets were moving out. They were leaving the big cities. They were moving to, local secondary markets. They were moving to communities that, offered relative greater affordability while maintaining strong relative connectivity and access, strong employment opportunities, strong amenities. That was really the big draw factor there, right? Since then, obviously the market as a whole was relatively slow, but we kept, regardless of what the overall average shows, there are always going to be people that need to move, whether that's circumstance, whether that's life stage, what have you. There are always people that are moving out, that are moving up, that are moving clear across the country. My sister just did that a few months ago. Okay, she moved into a hot market, and when you find a new job that forces you to move, the circumstances are just that you have to take what you can get, right? But with so much unmet demand over an extended period of time, eventually you hit a point where whether people see, you know, potential, positivity or a more hopeful outlook for the future, they worry about affordability worsening down the line, or they worry about missing, right, just missing the unit that they've been looking for, waiting for the longest time. People are going to move. People are going to act on that, and as a result, we see more people coming to market, right? Uh, Price appreciation, rent growth is not just a factor of what people think they can achieve, but it's ultimately a factor of what they think people can pay, right? And when there's more renters on market, when there are more people actively searching and inquiring with properties and touring properties, um, that means that there's more competition for those units. Right now, we are very much in a renter's market. What I mean by that is that there's clear imbalance, right? There are more people with units available. There are people looking, okay? And as we go further and further into the summer and we start to see that imbalance shift more so, in the favor of potentially the property owners, um, we are likely to see rent growth start to pick up again.
Yeah, because we're still seeing like high number of supply come to the market, right? Apartment completions are still quite high, which is great to see, obviously. But and this shows that how, I like to keep you on your toes. I don't have any direct numbers for this, but how much does like seasonality usually play into this? Because we are kind of entering the warmer months, right? I'm assuming as
Massively.
I'm assuming because, demand is up. How much of that is just it's always going to be up because we went from the winter to now the spring, right? So was this expected? Do you think that this is actually on target to what we normally are at? And do you think it's going to continue throughout the summer?
Yeah, I mean, if we're looking on a just broad scopes annual basis, peak summer, kind of the bottom of the winter, we're talking anywhere from 40 to 60% difference in overall leasing activity. Obviously, these are very broad numbers. When you look at individual markets and you look at individual years, that's going to shift pretty dramatically, right? You could have a year where in rental demand in the summer is a little bit weaker, and a year where winter demand is a little bit stronger, or vice versa, what have you. Um, when we look at an individual market, however, there is going to be a substantial difference from a property owner's perspective when they're trying to lease up a unit. Because in the summer, you may get, certainly a really hot summer leasing season, you might get 10, 20, 30 inquiries. And middle of the winter, when it's minus 12, minus 13, or maybe 10 years ago, minus 20, uh, you'd be lucky to get two or three.
Yeah,
Right.
just to be clear, when we say a hot summer leasing season, we're not even just talking about temperature. It's just a hot season, right? I'm just trying to make sure it's like the hot leasing season. You're literally talking about the temperature. Like when it's warmer out, people are more active to move. More supply wants to come in when it's warmer, and it just the notion of Canada has so many different provinces with different seasons, seemingly. But the areas that do really get a full on winter, we really do see demand decrease, right? So I think that's a really good answer to a question that I just spurred on you.
I mean, in line with that, we see that rent grows the fastest during the summer months, and then when we look at the long term average, rents will typically flatten during the winter months, and again, that's just a result of there's less relative rental demand, right? When we look at the actual chart, the annual rent growth or rental chart, we see that the rents rise during the summer, they plateau in the winter, or they rise, they plateau, they rise, they plateau, and in that long term, in the 5 year chart, there are effectively, you know, two periods of time wherein we weren't seeing that trend happen real time, and that was 2020 and 2024, right?
Interesting.
2020 we had COVID, and 2024 we had a crisis of affordability, and we had effectively just a scattering of renters in the market.
Mhm. Well, I think that that kind of segues nicely to kind of like the big story that we've been reporting on is that 5 years since COVID. Just for some background there, we have saw that asking rents have increased in purpose-built rentals in the past 5 years nationally by about 35%. There are some provinces like out east, Nova Scotia, where it's more, but there are some provinces like Ontario where that's half of that. But interesting enough, condo rentals have remained pretty much flat over the past 5 years. I think we said it rose by less than 1%. What's your take on this? Past 5 years in COVID, these are obviously large numbers. How should renters think? How should landlords think? And what do you kind of want the media and just Canadians to take from this?
Well, first and foremost, I know that when we looked at the 5-year numbers, we saw that provinces like Nova Scotia, the more affordable provinces saw the largest total percent rent growth, whereas the least affordable provinces, Ontario being one of them, saw the lowest relative overall percentile growth. Ultimately, it's if when we look at the dollar values, we're likely to see a bit of a different story. And obviously, Ontario, British Columbia continue to lead in terms of the highest achievable market rents. That being said, the reason we saw a lower relative percentage is because we're not seeing as much verticality from the top. Okay, probably not the best way to explain it. And I probably did a terrible job explaining it, but
Well, give yourself more credit. Give yourself some more credit here. We're just in the middle of explaining it.
ultimately, what we saw was that the most affordable communities were the communities that had the most, a ton of new activity and ton of demand. We saw people moving to more affordable communities. And as a result of that, we saw rent continue to be driven up and up and up and up. And over the last, 2 years, I can think of um, two markets that were considered at one point the fastest growing. Halifax, Nova Scotia, and Calgary in Alberta. They're both incredible, substantially more affordable than some of the other larger urban centers in Canada. And because of that, they created a substantial draw, and as a result, more rental demand. Okay, um, when we look at individual property types, it's always a bit of a tough story when you talk about condo rents being relatively flat on a national basis. That's kind of a misnomer from the perspective or from the sense that when you look at individual cities, you're not likely to see that trend. When you look nationally, they might look relatively flat, but ultimately that's likely a normalized figure that accounts for all of Canada and tries to account for the bias in distribution. And that bias is effectively, 70% of condos are likely going to be in the Greater Toronto or the Greater Vancouver areas. In those regions, condo rents have grown substantially, regardless. That said, over the last year, condo rents are relatively flat in those regions, but long term, they are still growing. Um, Last thing I'll say to you, Giacomo,
Mm.
last thing is that although we see this really substantial rent growth over the last 5 years, one thing I want to remind people is that on average, the annual average rate of growth over the last 5 years is approximately 3.3%. And the reason this is important is because when we look at the average 20-year rent growth, it's also just about 3.3%. Okay. Uh, and what that tells us is that outside of a few of these really strong, short-term inflationary periods or a more accelerated rent growth periods, the long-term trend is relatively consistent. And if it wasn't for some of these market instabilities that we were seeing, we would likely to continue to see a relatively flat trend in rental growth. Back in 2018, pre-COVID, we were seeing 2018, 2019, and we were seeing really strong rent growth. Okay. And that all came to a stop during COVID. At the end of COVID, rents have actually declined to pre 2018 rates. And then 2021, 2022, we saw massive rent growth. That massive rent growth, all it was doing was accounting for the decline, and then it continued to grow to maintain a long-term relative trajectory, meaning that in the short term, your eyes watered, your wallet hurt. It started to sit a little more lopsided because suddenly one
Yep.
side was short than the other. But in the long term, when we look at this, we see that again, the price appreciation of rents has been relatively consistent in the long term.
That's interesting because what I like to look at, especially for condos being flat, like I wonder how much of that has to do with the fact that a lot of these condos that are up for rent were like built to sell and they weren't sell
Well, they were built for investment purposes. They weren't built to sell. They were built to sell to investors that they could then rent, right?
because to me, like, it kinda made sense that purposeful rentals would have a much higher increase because how many of these condos, in order to maybe to recoup some of their investments, were actually put on a little bit more favorable market price to kinda rent? Um, so I didn't think it would be less than 1%, but I did think it would be a little bit less than purposeful rentals anyway.
One thing that people don't always isn't necessarily the most well known is the fact that on average, condo rentals, that is secondary market rentals, are actually more expensive than primary market rentals. You look at the same quality property, the same age, the same level of monetization, the condominium property is going to be currently, on average, about 15 to 18% more expensive. Obviously, on a case by case basis, that will change, but on average, approximately 50% more expensive. Pre COVID, that number was actually substantially higher. And that number has actually been trending down over the last 5 years gradually. Certainly, as the quality of purposeful rental has increased in Canada, certainly as the stock of purposeful rental has increased in Canada. But pre COVID, the accepted figure for that was 18 to 25%. Okay. And what that tells us is that at the end of the day, condominium rentals are more expensive. And even now, while condo rentals remain relatively flat year over year, um, that says nothing for the fact that they've remained more expensive on average. The reason that they were flat year over year was because, just like you said, we had this massive glut of new apartments or new condos, I should say, come to market, and all these investor owners suddenly realized, oh, the rent is not going to cover the mortgage. I'm hemorrhaging cash every month. I need to get this thing leased up quickly because selling and losing, $250,000 is not an option.
No.
I will make it float. I will feel the pain over the next year or two as I have to dole out a little bit of money every month to cover the mortgage, the maintenance fees. Lord knows the maintenance fees are a problem that a lot of people don't think about, especially when they're trying to flip a condo. And when the market falls out from under you, that doesn't happen.
No, and you mentioned something interesting there very briefly, but you're saying the quality of personal rentals increased, like, and I think that's a big part too, is a lot of these new rentals now, it's like a condo quality lifestyle, right? And sometimes the amenities that they have are better than what you're getting in condos. So I think that is a big part to play, like the expectation of what people want in a purposeful rental. And I think that's a really good thing that's happened over the past few years is the expectation is a lot more than just your dwelling, right? What else does your apartment come with? What kind of lifestyle? And on flip side, what kind of stuff can I cancel if I move to this building? Do I need my gym membership, right? Right? Do I need some of these new apartment buildings have internet included? Do I have to have like there's a lot of stuff that is increasing the quality of it, people's expectations, they want more. And I think that's had a big part to play. It's just vertical rentals are a lot better, I think, than what they used to be, or at least the lifestyle they offer.
Giacomo, you're absolutely right. It's not just about, the level of features and finishes. It's about kind of the lifestyle, but also just what it offers. We have had some uh, developers that had recently started building, and I'm not picking any favorites. Nobody paid me to say this, but just off the top of my head, Minto was very early on in the game in Toronto, and they brought some really high quality condo quality purposeful rentals to Toronto, um, before really everyone. You know, Once that was realized and they validated like this is actually possible, we had more and more developers come on gradually, build higher and higher and higher quality, and now we've got developers like Fitzrovia, like Westbank that are building across the country now, and the product that they're building right now, bringing to market is incredible. It's not just about the amenities, but it's about the whole lifestyle that they're trying to bring to market, and they're really investing heavily in that.
So I think that actually segues really well, David, with our next topic here. There's a lot of talk that we keep hearing about, the missing middle in home ownership, right? And I think just kind of in general, right, where we're seeing a gap in these mid-range rental options for families. We're seeing that as well for housing, but we'll stick with rentals here. So basically, yeah, there's this missing middle, we think. And do you think that there is this gap right now where we're going to start seeing that there isn't that really mid-range apartments for families or professionals who maybe don't qualify for these affordable housing options, and they also can stretch to these beautiful luxury premium rentals that are out there?
So let me answer your question with with a story instead. How about that?
I
This
love
will
that
be
idea.
real estate story time.
Still.
Well, before I give you the story, I'll give you an answer, which is yes and no. Okay. Yes, it's missing, and no, it's not missing everywhere. Okay. So the story is this: beautiful city, 1970. Rental construction is booming. People have homes. People are paying affordable rents, and Every year, new buildings come to market. 1980, and the city is just as beautiful. We have just as many new buildings coming to market. But the province over, things have changed. Suddenly, rental isn't the it thing anymore. Developers have shifted base. The government isn't incentivizing things correctly, and the newest rental is now 10 years old. Right? You want something new, you have to move into a condo. We jump back to the first city. It's now the year 2000. Just as beautiful, more new homes, rents are affordable. We jump over to the next province, and the newest rental building, or the vast majority of them, are now 30 years old. Uh, if it hasn't already come to you, what I'm describing is Montreal and Toronto, or Ontario as a whole, really.
Yeah.
Oh, Calgary, Ottawa, what have you. Okay. The point that I'm trying to make in my awful story is that the the missing middle exists only in the markets wherein there was a shift. Okay, and that shift is they stopped building rentals. Okay, markets in Canada that continue to build rental apartments long term, historically and now have that middle. Okay, it might not be the same. The quintessential. The I want the decorative fireplace and the red bricks and the exposed paneling. No, it's going to look different everywhere that you go, but ultimately it's there. Okay, and the reason that exists, okay, is because of what we call the housing continuum. The housing continuum, in effect, is a theory wherein through your life, okay, there is a continuum of housing that options and opportunities available to you. Okay, um, in Toronto, okay, when you move out of your parents' home for the first time, okay, the options available to you are maybe move into a basement apartment, maybe move in with a friend of yours. Okay, once you have moved on past that, what's the next option? Well, I'm either going to move into a condo or I'll find another purposeful rental built in the 1970s or earlier. Okay. There is no next step. Okay. You're either jumping up to a whole other level. There's no gradual progression of housing quality, of housing age. Okay. There's just this massive gap in the middle between this 1970s, the current era, wherein we really just didn't have any purposeful rentals built. We had a lot of condos built. Okay. And large stock of those condos are obviously used by renters or being rented. Okay. That said, older condos, maybe 30% of them were being rented, with 70% of them being occupied by their owners. Okay. Markets that did not have that decline in rental construction do not have that issue to the same extent. And the reason is because a large amount of new housing construction every year was contributed to the purpose-built rental stock. And that meant that there was always new housing available. So if you lived in a new building or in a building that was 10 years old and a new building came to market, you could move up to that new building. You've now vacated the unit, you've made it available, someone else can move into that unit, and it allows people to constantly migrate and move around, as opposed to, I'm in my 1970s era building, and if I move out now, I'm gonna be forced to pay 40% more because nobody wants to build purpose rentals in my city.
That's interesting because you also mentioned there too, like when you're talking about someone's steps, they move out of their parents, they go to an apartment, they live there for a while. You didn't mention that like the next step is home ownership. That was just like not even
Oh, flyer.
but I like because I
That's
think
very telling, you're right.
but I think that's also part of it. Is like you move out of your parents, you rent an apartment for a few years, and then you rent another apartment. Like you didn't mention like it wasn't even a thought to say like, well then they eventually graduate into home ownership. It's But I think that's in people's minds right now is, you rent your first apartment, and I think that's the idea, and I think it's a good one, to be honest. Like, your next move is probably to a better apartment, which isn't necessarily a bad thing. Like, people can rent, for the rest of their lives. There's a lot of benefits to having the flexibility of renting, but, maybe that graduation from your first apartment is now to that premium rental experience, and then maybe then it's homeownership if they so choose, right? So maybe that's kind of the trajectory that a modern renter is looking at in some of these cities. One thing that I think was interesting is the discrepancy between like price and location, because so much of what you've talked about today and so much about what we report, yes, we look at a national story, but things are so location based that some provinces are experiencing things that are so different than other provinces. Secondary markets seem to be telling completely different stories as primary markets, and then they catch up to primary markets. But, between location and price, what do you see as more important in so much as what factors in these rental prices? Maybe even demand and consumer behavior as well. Is it strictly affordability? Is it accessibility? Is it a mix of both? What are you kinda seeing?
You know, for the longest time, I would have always said that location is first and foremost the key consideration. Uh, when I was first looking for an apartment on my own,
Mhm.
um, I obviously had a budget in mind. Okay, but as part of that budget, I was willing to consider a lot of older stock, newer stock, and I was relatively flexible because I wanted to live in a particular area, right? It took me a little while to find something that was in my budget and in my location, but I really felt like location was the big factor there, right? Price obviously dictated what I could look at, but location was what ultimately determined whether I would even look at it in the first place.
Mhm.
Okay, or consider it, I should say. What we're finding is that more and more so, it isn't necessarily location, but it is price. But that's not necessarily a bad thing, or it's not a response to, um, it's not exclusively a response, I should say, to price exhaustion. But it is because people aren't really worried about. Not everyone, at least, is worried about where they're going to live exactly. People have general areas where they're interested in living. They're not interested in living in maybe a particular corner or a particular neighborhood, but increasingly more renters will identify a price point, and then based on that price point, will then just look large swaths in the region that they're interested in. That really wasn't as much the case previously. Previously, again, like I said, renters would find the location, and then based on price, they would start to look. Now it's really the other way around. They look at price, and then based on the price, then they start to look.
Mhm.
Obviously, depending on the city, depending on the individual renter, that's all subject to change, right? When we look at older downsizers, so these are, old people that are typically 55 plus. So that is downsizers and older retirees. We see more of a focus on price. As we move down in the age brackets, we see a relative increase or relative growth in the focus on location. We actually see more of an interest in the quality of life. So these are like quality of life amenities.
Sure.
People
Makes
that
sense.
are, people that have been renting for the last 5, 10 years, and had aspirations for home ownership are now saying, well, if I'm going to be paying premium for my rent, I might as well get them the features that I want.
Yeah,
Right.
exactly.
Certainly, me and my wife are looking for our next place. It's going to have in-suite laundry. I made that this concession last time, and that's not happening a second time.
Yeah. No, I hear you. Um, yeah, I think that's ultimately gonna be good for the renter, though, because it's showing, developers, property managers that, um we expect a lot, I think, if we're gonna be paying these premium rents. I think that's and I think we're kind of seeing that a little bit too if you just visit Rentals.ca and you look at all the move-in incentives, like, the amount of things that I think a renter expects even before they fill out a contact form, right? A lot of them wanna see these move-in incentives because somewhere else is gonna be offering that, right? So I think it's gonna ultimately create, like, a better rental ecosystem because people are gonna be expecting more. You won't probably look at a building unless it has in-suite laundry, right?
Absolutely
Right?
not.
You probably won't even look at it. So you and your wife, you know, you can already probably exclude a ton of apartments. Um, and I think that's gonna be the thing though. Like, it's not a good or bad thing, it just ups everyone's game. So
Yep. I mean, as people become more upwardly mobile, as people age out as well, I certainly, like I mentioned, the last time I looked for an apartment, I had a particular zone in mind. The
yeah.
time before that, I had a particular collection of neighborhoods that I wanted to live in. At this point, when we're looking for apartments, the decision is what city do I want to live in, or within how many kilometers of a highway do I want to be, right? Otherwise, the world is my oyster. If it's King City, Aurora, Newark, Richmond Hill, doesn't make a difference to me as long as I'm within 15 minutes of a highway.
Yeah, no, for sure. And I think we'll like, it's a good segue to some shameless plugs. I mean, maybe that could be a segment as we wrap these up, shameless plugs. But, Reynolds, I'd say we did our March Madness pool, but it wasn't for basketball teams, even though my March Madness bracket was destroyed early on. But what we found was actually In Sweet Laundry was the winner of our March Madness pool. And like, I think what that shows is that people really are valuing convenience a lot of the times, even sometimes more than luxury right now, especially. when money's tight, but you are not alone in looking for in-suite laundry. And that's what we saw from people who filled out our March Madness bracket. People want as much convenience as possible, especially if they're paying these high rents. So, um, yeah, we also encourage people to check out our March Madness blog because we do have our updates there. And so we kind of see what amenities people like the most, and it will kind of made to the end. So, um, but that's not the only thing we have for shameless plug. We got one more thing, David, and you can talk a little more about this if you so choose. But if you visit the Rentals.ca National Run Report, you will see that we've kind of changed it a little bit where we used to have like a top 35 cities there, and you could go on the report, see one and two bedroom rents, the changes month over month, year over year. But we kind of expanded a little bit there. So what you can actually do is use the search filter up top and see a much wider range of cities that we offer. Currently, we're at 60 right now, and you can even do some sorting options as well, where you can sort by month over month changes, year over year. So we encourage you to do that. Play around a little bit more with the functionality of the run reports. I think David, you can attest to this too. We're looking to add a lot more features like this.
Yeah,
Give
we
more
are.
options.
We are looking to democratize our data, and I think that's probably the fanciest and best way of putting it.
Yeah.
We want to know what that means. So there. Ultimately, it just means getting data out there in the hands of people, making it more freely available, increasing access, and that's what we're trying to do. Um, we're going to continue to increase the amount of data that we have available over the coming months. We want to offer people, our readers, with a greater variety of views. We got to provide them with a greater variety of the individual data points, comparisons, and ultimately just want to keep expanding on what we have because it's an incredibly helpful tool. It's very useful, and I see a lot of importance placed on it by quite a few people, not just us. Thank God, because we spent a lot of time putting this together.
Yeah.
With our good friends at Urbanation. Um, One last thing that I want to say is if anybody has any questions, comments, if there's anything they want to cover, might be a little too soon, but by all means, they can reach out to us through any of our channels, leave a comment, and we'll be sure to look out for them so that hopefully we can try to talk about what people are interested in, not just what we're interested in.
Absolutely. And if you visit Rentals.ca's report, you can even subscribe to it just by filling out your information there. So you can get it every month when it comes out and along with some of the updates there. So I think we'll leave it there. David, I appreciate you, my man. We will chat in a month. We got some work to do on the next run report, but appreciate this as always. And yeah, let you get back to your day. Thanks, man.
See you next month.
You bet, buddy.